After studying this module, you shall be able to understand the concept of cost accounting and management accounting. Also, the nature and importance of both cost accounting and management accounting. Similarly, limitations of both cost accounting and management accounting. Similarly, the difference between cost accounting and management accounting. And lastly, the relationship between cost accounting and management accounting. Cost accounting is a recent development in the field of accounting. In the beginning of 20th century, the industrialists became more cost conscious. One of the reasons of this was the increasing competition between the manufacturers. Another reason which contributed for the development of cost accounting is the increasing government control over pricing. It became important because of the following reasons. 1. To make constant efforts for improving the quality of products. 2. To trace accurately the cost of each product and job. And lastly, to control costs. Financial accounting failed to achieve these objectives, and hence the accountants came up with a new technique of cost accounting. Now we will discuss the meaning and scope of cost accountancy. The term cost accounting is narrower than the term cost accountancy. As per the terminology of management and financial accountancy, published by the Chartered Institute of Management Accountants, London, cost accountancy is defined as the application of costing and cost accounting principles, methods and techniques to the science, art and practice of cost control. It includes the presentation of information derived there from the purpose of managerial decision making. Some of the areas of cost accounting are cost accounting. The process of accounting for cost is known as cost accounting. It includes the accounting procedures relating to recording of expenditure and income and the preparation of periodical statements with the purpose of determining and controlling costs. Costing. The technique of accessing costs is known as costing. Cost accounting provides the basic information for determination of costs, while costing helps in the arithmetical calculation of memorandum statements by the method of integral accounting. However, the terms costing and cost accounting are often used interchangeably. Cost control. As per the Institute of Cost and Works Accountants of India, cost control means the act of power of controlling or regulating or dominating or commanding costs through the application of management tools and techniques to the performance of any operation to most predetermined objectives of quality, quantity, value and time at an optimum outlay. Cost control is exercised by using techniques like standard costing, budgetary control and quality control, etc. Periodical report submission by the cost accountant helps management in exercising control over costs. Cost reduction. Cost reduction is a new dimension to the function of a cost accountant. It includes achieving real and permanent reduction on unit cost of goods produced or services rendered without compromising on their quality or suitability. Cost audit. It is the verification of cost accounts to keep in check the cost accounting plan. It involves checking the accuracy of cost accounts and verifying that the principles laid down have been followed. It is vital in case of business where cost accounting is carried out on a large scale. Now, the objectives of cost accounting are to find out the cost of a product, process, or service, to provide information regarding the cost to make and sell products and services, to facilitate measuring of efficiency of the organization as a whole, to assist in cost control, to help in cost management, to ascertain the profits of each and every business activity, and lastly, to help management in formulating operative policies like determination of cost, volume, profit relationship, shutting down or operating at a loss, making or buying from outside suppliers, and continuing with existing plant and machinery or replacing them, etc. The importance of cost accounting is as follows. 1. It helps in period of trade depression and trade competition with the help of adequate costing facilities. 2. It helps in the fixation of the price of a product to a great extent by providing valuable information from the costing records. Third, it helps in providing a reliable basis on the basis of which tenders and estimates might be prepared. Fourth, it helps in distinguishing between profitable and non-profitable activities and thus channelizes the production on the right line. As costing helps in knowing the cost of a product at every stage, it eliminates wastage. Regularly maintained costing records for different products and for different volumes of production helps in making comparisons. An adequate costing record provides management data necessary for preparation of periodical profit and loss account and balance sheets. The study of various manufacturing operations by a cost accountant aids in determining and enhancing the efficiency of the organization. Costing helps in control, which in turn helps in inventory control. By providing alternatives, cost accounting helps in cost reduction in the long run. Cost accounting assists in measuring productivity and suggests ways to improve it. Coming on the arguments against cost accounting, the analysis, allocation, and apportionment of cost in the costing system requires a lot of work, thus making it expensive to install the system. As a result, shown by the cost accounts differ from those shown by the financial accounts. Preparation of reconciliation statement become important, thus increasing the workload. The costing system is often called unnecessary as it itself does not improve the efficiency or control the costs. Next, we will discuss management accounting. Management accounting is concerned with providing all the useful information to the management. Management accounting is the part of accounting information which helps the management in the process of planning, controlling, and decision making, etc. As per the Institute of Cost and Works Accountants of India, also called ICWAI, management accounting is a system of collection and presentation of relevant economic information relating to an enterprise for planning, controlling, and decision making. Management accounting plays a very important role in providing requisite information to the management for performing the functions of planning, controlling, organizing, and decision making. It serves as a decision support system to all the levels of management in an organization. A management accountant plays a vital role by analyzing and interpreting the accounting information and meeting the informational needs of an organization at all the levels of management. The nature of management accounting can be seen through some of the characteristics of management accounting, which are as follows. The information used in management accounting is derived from the financial accounting statements and cost accounting records. Management accounting information is primarily used by the management for the internal use of the organization. The main aim of management accounting is to help the management in the process of decision making and control. Management accounting is optional for an organization rather than being obligatory. It is concerned with future as it helps in taking decisions for the future course of action. Unlike financial accounting, in management accounting, there is flexibility in the presentation of information. The form of presentation of the information depends on the management depending upon the utility and the usefulness of the information. Next, we will talk about the scope of management accounting. Management accounting has a very wide scope as it not only includes financial accounting and cost accounting but also other financial records like tax accounting, internal audit, etc. This can be explained as under. Financial accounting. A proper financial accounting system serves a base for providing data for management accounting and planning of future organizational activities. Cost accounting. Management accounting makes use of various cost accounting techniques like budgetary control, standard costing, marginal costing, differential cost analysis, and CVP analysis, etc. Budgeting and forecasting. Management accounting helps in exercising budgetary control by planning business activities for the future using the technique of forecasting and budgeting. Tax planning. Management accountant relies on tax accounting and planning to minimize tax liabilities by taking advantage of various tax provisions. Reporting to management. Timely and effective decisions require the system of prompt reporting. Reports are prepared at all levels of management to assist them in decision making. Cost control procedures. Management accounting is incomplete and of no use without cost control procedures like inventory control, labor control, and budgetary control, etc. Statistical tools. Management accounting makes use of various analyzing tools for presenting data like graphs, tables, and charts, etc., for preparing reports. Internal control and internal audit. Management accounting is dependent on the internal audit and control to find and fix loopholes in the financial system of the organization. Financial analysis and interpretation. To help management achieve their objectives in an efficient manner, various techniques are used by the management accountant to analyze and interpret the financial data. Office services. The management accountant is also expected to control routine office procedures like filing, copying, communication, and data processing, etc. Now we will discuss the functions of management accounting. Management accounting helps in planning as it provides information and data to forecast and prepare both short-term and long-term plans for the organization to follow. A, di- a diverse range of techniques like standard costing, marginal costing, and budgeting, etc., are used for the purpose. It helps in coordinating the activities of an organization. To illustrate, while preparing budget for a particular department, coordination is followed so that there is no contradiction in the budget of all the departments of the organization as a whole. Proper financial reporting helps management accounting in achieving this coordination of activities among the different departments. Management accounting helps in controlling by using the control techniques of standard costing and budgetary control, etc. Management accounting also helps in communication by the way of presentation of performance reports to various levels of management. This helps in exercising control for successfully running an organization. Management accounting uses various analyzing, interpreting, and presenting techniques to make accounting data understandable. The accounting data is presented in a non-accounting language to make it understandable to everyone in the organization. Management accounting also provides qualitative information like quality of goods, opinion polls, and logic, etc., for taking better decisions. It helps in decision making by assisting management in taking crucial decisions for the success of the organization. The tools and techniques of management accounting are standard costing and variance analysis, marginal costing and cost volume profit analysis, budgeting, ratio analysis, differential cost analysis, responsibility accounting, risk analysis, learning curve, accounting for price level changes, statistical and graphical techniques, value analysis, work study, etc. Some of the limitations of management accounting are: management accounting makes use of historical data supplied by financial accounting and cost accounting to make decisions. If in case historical data is not correct or accurate, management decisions might not be correct too. Apart from having knowledge about financial accounting and cost accounting, A management accountant also needs to have knowledge about disciplines like economics, taxation, etc. A lack of knowledge about the mentioned disciplines limits the quality management accounting. Management of accounting uses various accounting and non-accounting tools and techniques to provide management the information for making decisions. But at times, the management ends up taking decisions based on their intuition rather than using these tools and techniques. This might lead to an unscientific approach for the purpose of decision making. Though management accounting provides information to the management for the purpose of decision making, it can't act as a substitute for management and administration. Small concerns might not be able to install management information system as it requires heavy investment for setting up of a wide network of information system, rules and regulation. The connotation of information provided by management accounting may lack objectivity and get influenced by the personal bias of the person using the information. This might have an adverse effect on the quality of the managerial decisions. Now, a comparison can be done between cost accounting and management accounting. 1. On the basis of scope, cost accounting is limited to providing information related to cost for managerial issues, whereas management accounting is broader in scope because it not only provides information regarding costing accounting but also about financial accounting for managerial uses. 2. On the basis of emphasis cost accounting, emphasis is on ascertainment of cost and control of cost to ensure maximum profit, whereas in management accounting, emphasis is on planning, controlling, and decision making for maximizing profits. 3. On the basis of techniques used, cost accounting uses standard costing, variance analysis, marginal costing, budgetary control, uniform costing, etc. Whereas management cost accounting uses all cost accounting techniques in addition to the techniques like fund flow statement, ratio analysis, statistical analysis, etc. 4. On the basis of evolution cost accounting evolved because of limitations of financial accounting, whereas management accounting evolved because of the limitation of cost accounting. 5. On the basis of statutory requirement in case of cost accounting, maintaining cost records is necessary in some industries specified by the government from time to time, whereas in case of management accounting, maintaining management accounting records is voluntary. 6. On the basis of database, in case of cost accounting, financial accounting records serve as a database for preparation of cost accounting records, whereas in case of management accounting records are derived from the records of financial accounting, cost accounting and other sources. 7. On the basis of installation, the system of cost accounting can be installed without management accounting, whereas in case of management accounting system can't be installed without a properly placed system of cost accounting. Next, we will discuss the relationship between financial accounting, cost accounting, and management accounting. Financial accounting, cost accounting, and management accounting are closely linked with each other. Management accounting uses the information provided by both financial accounting and cost accounting. To illustrate, financial statements like profit and loss account and balance sheets are used in ratio analysis, which are in turn used by management accounting for the purpose of organizational planning and control. On the other hand, cost accounting uses detailed application of financial accounting in computation of costs and preparation of cost records for providing cost information about various products, services, and departments, etc. of an organization. This information again is used by management accountants for the purpose of decision making. To summarize, cost accounting is used to record information about the income and expenses of an organization for the purpose of controlling costs. Management accounting is used by the management of the organization to take important decisions like planning, organizing, and controlling. Financial accounting, cost accounting, and management accounting are very closely linked with each other.